So high interest rates are actually creating opportunities for so many buyers right now. Hey, what's up, guys? Kenny Simpson. Welcome back to The Brief. So this week, I want to jump into the Feds. Good old Jerome Powell. If you never knew who he was, guess what? You do know who he is now. It's the old guy with the glasses that you've probably seen 10,000 memes about. But there's a group of people that you know that sit in a room and they dictate what's going on with inflation. And how are they controlling inflation? Well, guys, they lowered the rates for the last couple of years, and now they have jacked those interest rates up to where people are like, oh my gosh, what's the rate, Kenny? How is this even possible? Well, guys, it is possible. So what is going on with the Feds? What's going on with the economy? Here's a quick little blip. So you guys out there, you just keep spending money like you apparently just have it. There must be a money tree in everybody's backyard. There's too much money in the systems. You guys are eating out, you're shopping, you're traveling. I mean, it's just crazy. You're going to concerts, you're going to ball games. It's not stopping. Higher interest rates are not, just because interest rates are 8% doesn't mean you're not going to go eat or go to a ball game or go out, go have fun with your friends, right? That does not correlate. So higher interest rates, are the Feds going to keep hiking? Yes, they are. Is there a Fed pivot soon? What? You're going to start hearing pivot. What does that mean? That means instead of 75 basis points, maybe he'll do 50 basis points. Maybe he'll do 25. Maybe he'll just stop. But my guess is we're going to get another 75. We're going to get something 75 or 50 this year. Coming into Q1, I think we will start seeing the Fed pivot because he thinks he's going to start controlling inflation. The second thing I want to talk about is, you're going to have to edit this video, sorry, is listings, new listings. This chart that just popped up, as you can see, this up and down, up and down, up and down, like a crazy roller coaster. Guys, when we come into wintertime, you can see summertime, spring, we peak out at new listings, and then we trend down from 5,000 to 2,000. So we are coming into less new listings. That is typical. But the next chart I want you guys to look at is active listings. We put this chart up for both the last 10 years. Look at 10 years. What do you see as a trend? Well, you can see from 12, 13, 14, 15, 16, 17, 18, 19, and 20 things change, that active listings in San Diego seem to be above 10,000. The average is probably somewhere 11, 12,000. Currently, we went really low and now we're trending back up and we're kind of around the 5,000 mark, as you're seeing on this chart. What does that mean? We're probably 50, 60% under active listings. That is creating problems, obviously, for buyers and sellers because there's not much product, right? Here's the crazy thing. Imagine if we had 12,000 listings right now on the market. Yeah, we would have a correction for sure, a bigger one than we have now. Here's the crazy thing. At least 90% of the borrowers out there that have a mortgage have a 5% rate or less. 50% have a 3% rate or less, and some like 80% have a 4% rate. Why are you moving? Why are you selling? Death, divorce, split up, cash, got to move a job, something like that. Otherwise, you're just sitting there enjoying your low rate, your low payment. You're not going anywhere. So buyers, if somebody is selling, I just told you probably why. You're getting an opportunity because rates are high. Sellers are starting to understand they have to give a deal. And the last thing that I mentioned up front was rising interest rates are creating opportunities. Yes, they are. The house that was $1 million in that great neighborhood that everybody wanted to move into because of the schools and this and that, somebody's paying $100,000, $200,000 over, no problem when the rates are 2.5%, 3%. That house that's listed at $1 million now is probably getting offers around $970,000, $950,000 with a seller credit to buy down maybe a 2-1 or buy down that crazy interest rate from 7% to 5% or to 6s, so that buyer feels better about what they're getting into. So this is creating much opportunity for buyers. Unfortunately, sellers, you missed the mark if you didn't sell. This is not really creating much an opportunity for you, but if you do have to sell, there are buyers out there. Just make sure and know this: if you go on the market and you are not listed correctly and you have zero offers, you are overpriced. And buyers are smart because their agents know and they're looking at many houses. If you're priced correctly, you could have 4 to 5 offers, at your price, maybe a little bit over, and your house will go quickly. If you're sitting on the market and watching this video, well, guess what? You're overpriced. You got to get into reality or just take your home off the market. Otherwise, thanks for watching. Until next week, we will continue to watch all this exciting stuff in our economy. My name's Kenny Simpson. I will see you soon.